tonight. Indices end a volatile day in the red yet again. Sensex takes a losing run to a sixth day. Nifty settles below 17,100. Auto, capital goods, top losers in today's session. Oil pulls back after surging to 7-year highs as it became clear the first wave of US and European sanctions on Russia will not disrupt oil supplies. BharatPe boardroom drama gets murkier. Maruti Grover is sacked by the company, reacts by posting videos of alleged drunken parties at the company offices. Tata's pick for Air India CEO hits security clearance hurdle. Ilker Aychi's close ties to Turkey's ruling establishment could lead to a scramble for a new leader for Air India. And Udayan Mukherjee answers your questions on stocks in a special segment, Ask Udayan. Keep sending us your queries for well-researched, balanced views. Bears continue to keep control of the Lal Street. Benchmark indices eventually slid for the sixth consecutive day, dragged by selling in select banking and auto names. Though easing oil prices, despite sanctions imposed on Russia, boosted the morale of investors. In a choppy trading session, Sensex failed to stay in the green, ending 69 points lower, falling to 57,232. Nifty barely managed to hold on to the 17,000 mark. Both indices posted the longest losing streak in over a year, but broader markets bucked the trend to stay well in the green. As crude receded from a 7-year high, ONGC was a top Nifty loser. Auto stocks saw a sharp fall in the last hour, with Hero Motor turning out to be the top laggard in the space. Others on the list, NTPC, L&T, JSW Steel. Meanwhile, Kotak, Titan, Indices, Tata Consumer, Maruti, some of the gainers in today's session. Crompton Greaves Consumer was the top mid-cap gainer after the Butterfly deal, with Crompton acquiring 55% stake in Butterfly Gandhimati. Butterfly stock hit a 52-week high. And finally, after a pullback in the greenback, as well as with crude oil prices, the rupee appreciated by 25 paise to 74.59 against the US dollar. Oil prices took a breather after surging to a 7-year high the previous session, as it became clear that the US and European sanctions on Russia would not disrupt oil supplies. According to US, the sanctions will not target oil and gas flows. At the same time, the potential return of more Iranian crude to the market also kept a lid on prices. Yesterday, oil nearly scaled to the $100 a barrel mark for the first time since September 2014, on worries that Western sanctions on Russia could hit energy supplies. On the other hand, though, petrol and diesel prices in India continue to be on freeze. They could rise once assembly elections in the states come to an end. Meanwhile, India's fuel appetite could touch a record next year, even as crude prices move toward the $100 a barrel mark. Demand has been pegged at 214.5 million tons in the year, starting on April 1st. The battle at BharatPe is getting murkier by the day after the company sacked Maruti Grover, head of controls and the wife of Ashnir Grover. She has hit back with videos of what she describes as drunken, obscene parties at the company offices.
It is one of the wonder startups which has taken the fintech world by storm. Less than 4 years old, BharatPe is today valued at nearly $3 billion. And these are the videos of the purported drunken parties at its offices, shared on Twitter by Maruti Grover after she was fired by the board. The former head of accounts and controls posted these videos alleging male chauvinism by the company board. Maruti Grover was earlier fired by the company on charges of misappropriation of funds. Not only was Maruti a top officer of the company, She is also the spouse of Ashnir Grover, the co-founder and the much recognized face of the company, himself on forced leave till March end. This after he allegedly abused a Kotak Mahindra bank employee. Sources say Madhuri Jain Grover may also have to return the stock options granted to her by the company. The employee contract reportedly has a provision for the company to take back equity of a terminated employee. Sources also say the role of Ashnir Grover may be limited to a shareholder in the company and not as one of its officers. Meanwhile, the big governance review report is likely to be put before the company board next week. Ashnir Grover has already approached an arbitration court in Singapore, claiming the probe against him was illegal. Reports say that he may also seek indemnity from any future liabilities in exchange for selling his 9.5% stake back to the company. Madhuri Jain Grover stands accused of a recruitment scam as well as creating fake invoices along with her brother Shwetank Jain. This report filed by Misbah Malik for Business Today Television.
The proposed appointment of Ilker Aichi as the new CEO of Air India has hit a security hurdle. Aichi is considered close to Turkey's ruling establishment, with the country's president even attending his wedding as one of the witnesses. Turkey's current regime is close to Pakistan, and sources say that his candidature for the top Air India post is no longer a given. For more information on this, let's go to our reporter Karishma Sudani. Karishma, how certain are we that his appointment is up for reconsideration?
Well, Abha, it is not yet known whether a formal application for the security clearance has been filed by the Ministry to the Ministry of Home Affairs by Air India or not. And there is still time for that to happen, because you see the new CEO of Air India only assumes his responsibilities from April 1st, 2022. But the hurdle that's coming in between, and like you also mentioned with Aichi, is that he's been an advisor to the then mayor and now president of Turkey, who of course shares close allies with Pakistan and has rather had a hostile view on India and its leadership. In fact, sources say that headhunting agency Egin Zender had earlier also shortlisted two other names, like we know, and reports have been talking about it. One was an aviation veteran, and the other, of course, was the former CEO of British Airways. Sources also tell us that both these gentlemen were in India to do meetings with the Tata Group, but of course this came as a surprise for the whole country, where the Maharaja, new CEO, has been announced by Tata on Feb 14th. Now it's a wait and watch game. While this is a procedural hurdle, but it could definitely turn around the dynamics. All right.
In the meanwhile, how is this going to impact operations, Karishma? What kind of a timeline do you think they're going to look at, in terms of bringing on board a fresh candidate? How long is this process likely to take? Do we have any indication?
Well, I think it's really going to depend on how the process from Ministry of Home Affairs takes place. I mean, if the security clearance and rest goes in hand, then 1st April 2022 as the date that Tata has given is good to go. But if there is a reappointment because of certain conditions, which are also, of course, quite a debate around the relationships of India with other countries, then that could push the plans of a new CEO announcement further. Like I said, it's a wait and watch game. 3 names already have been out, yet nobody successfully has been finalized for this position.
All right. Thanks for joining us with that, Karishma. We'll keep an eye out on that story as it develops. America's war of sanctions against Russia is being captained by none other than a top White House official of Indian origin. The 47-year-old Dalip Singh has a storied history in economic matters and now has been fielded by President Joe Biden as the man to cripple the Russian economy.
Backed by popular demand is Dalip Singh, the man tasked by the US President with imposing punitive sanctions on Russia over its actions against Ukraine. The young officer, who is Deputy National Security Advisor for International Economics and Deputy Director of the National Economic Council, made his second appearance in the White House press room in a matter of days.
After consultations overnight with Germany, Russia's Nord Stream 2 natural gas pipeline will not become operational. That's an $11 billion investment in a prized gas pipeline controlled by Russia that will now go to waste, and it sacrifices what would have been a cash cow for Russia's coffers. But it's not just about the money. This decision will relieve Russia's geostrategic chokehold over Europe through its supply of gas, and it's a major turning point in the world's energy independence from Russia.
Born in the US, Dalip is from a family which moved to the US nearly 3 generations ago. His great-grand-uncle, Dalip Singh Sond, was the first Indian American elected to the US Congress in 1957. Singh has done his graduation in economics and public policy from Duke University and a dual MBA in international economics from MIT and Harvard. He was the executive vice president and head of the markets group at the Federal Reserve Bank of New York. He was also Deputy Assistant Secretary of the Treasury for International Affairs and Acting Assistant Secretary of the Treasury for Financial Markets in the Obama administration. A veteran of the Obama administration, Dalip Singh was reportedly handpicked by Biden as his Deputy Security Advisor. His deep knowledge of the international economic workings are now proving invaluable to the Biden administration. Bureau Report, Business Today Television.
New wheels to hit Indian roads soon. Maruti Suzuki has launched the all-new Baleno with prices starting at 6.35 lakh rupees and going up to 9.49 lakh rupees. Bookings for the new Baleno have also been opened officially, and deliveries are set to begin from today itself. The hatchback is loaded with some new features like heads-up display and 6 airbags. PTTV's Chetan Bhutani caught up with Kenichi Ayokawa, MD and CEO of Maruti Suzuki, and asked him about the launch and any price hikes the company may be planning. Listen in.
Tell us about the expectations of the vehicle, sir. Great pricing, great aggressive looking car with good features. Tell me the time, why is it launched now? Do you think it could have been posted for a later Holi release or something?
I think it is my pleasure because that we preparing a new age Baleno to the customer. Since 2015 that we launched this vehicle, and already 7 years has passed. Unfortunately, that due to the COVID, etc., happened that we had little bit delayed that new launch. Unfortunately, today we can start delivering it to our customer. People are waiting in the market. It's my pleasure.
Ayokawa-san, the season is clearly of the SUVs and the MPVs. Don't you think that first the Ertiga or XL6 could have been given a more aggressive look and then probably a hatchback segment could have been looked at?
No. We are separate, equally that preparing those kind of, segment already. That gradually that we can opportunity to announce that the market.
There was a recent, about 2 months ago, there was a price hike that was announced, sir. In the intermediate future, are you expecting a price hike? Have you spoken between the company about intermediate price hike, sir?
I think that we are reviewing it. I already said that Mr. Shang said that we reviewing carefully that cost situation, and maybe last year very quickly improving at commodity price, etc. I hope this year little bit stable. We can try to absorb some cost by our cost reduction effort, etc.
Let's take a very quick break on that note, and when we come back, we'll have our special segment, Ask Udayan. us here on Business Today, and you're watching Ask Udayan, the show where we answer all your questions on stocks. I'm Abha Bakaya, with me, our global business editor, Udayan Mukherjee. The stock market has been seeing immense volatility. We take a look at what is perhaps the best approach at a time like this. And do keep sending in those questions. The number is on your screen. We'll try and answer as many as we can every week. Let's begin and take some of our queries now. Our first question today is from our viewer, Ritu Tiwari in Mumbai. Ritu, go ahead.
Hi Udayan, this is Ritu Tiwari from Mumbai. I have 100 shares of IEX. I bought it at 264, and actually I've been incurring losses for a while, so I needed to ask you and have your suggestion. Should I exit this position? Thank you.
Well, IEX is a good company actually, Ritu, so I don't think fundamentally you need to worry too much. I know you're sitting on about a 15-20% loss on the counter, and that's never very comfortable. But IEX is fundamentally a good business. And as you know, since you own the stock, it's the leader in electricity exchanges with a 90% market share. And some new products and exciting products are coming on stream because derivatives have been allowed in electricity exchange contracts, trading contracts, because of the recent settlement between CRC and SEBI. And I think that opens up interesting possibilities for IEX as an exchange. Also, when the whole renewable units come on stream over the next few years, I think that will add another dimension to IEX's revenue stream going forward. And there are many good things about IEX, not just the fundamental story, but if you look at the quality of the balance sheet, absolutely pristine, debt-free balance sheet, 50% return on equity, you can't find fault with that. So the stock has corrected a bit too. I mean, it was at 320, you bought at 260, and it's now closer to 220. But the only problem with IEX, I would say there are two problems. One is that the last couple of years, the company has grown at a scorching pace of 35%. Now, because of the base and other factors, I think growth will slow down. We'll probably still get growth, but maybe closer to 20-22% and not 35%. So maybe the valuations need to adjust for that. But the principal problem with IEX right now is that the stock is a very expensive one. And given that the market is seeing so much volatility, particularly in the expensive part of the market, I think IEX might also struggle to outperform in the near term. So what you could do is probably even average your position if you find the stock below 200 and probably look at it as a medium-term bet. Because as I said, fundamentally, it remains a fairly strong business, albeit with slightly slower growth.
Sarthak Verma has a query. He's from Raigad, and this is on one of those banking stocks. Let's listen in.
Hi Udayan, this is Sarthak Verma. I bought 130 shares of Union Bank at Rs 38. Should I continue to invest in the stock for a long term of 2-3 years? Thank you.
Well, I think things are going for public sector banks after a long time. There's quite a bit of interest, as you can see in the market as well. I mean, stocks like SBI are outperforming names like HDFC Bank, and that's not happened in the last decade. So there is interest in public sector banks. There's a growing feeling that the balance sheets have been cleared. And now in the next credit cycle, as it fleshes out, you will see public sector banks actually reporting great earnings and catching up on the valuation front with private sector banks. And there might be a grain of truth to that as well. Union Bank is a very inexpensive name. I mean, I was talking about IEX just a while back, which was very expensive. Union Bank trades at half its book value, 0.5 times book, next year's book. So, you can't find stocks too much cheaper than that. They are also trying to fix their asset quality issues. There are still a couple of lingering issues with bad assets like Shrey Infrastructure and a couple of state government loans. So I think some of that will need to be dragged along for a while. But broadly, a large part of the asset quality cleanup has happened, and some kind of loan growth and earnings growth is beginning to kick in. My sense is that public sector banks will probably perform as a basket. Some may do better, some may do worse. But if the current mood continues and earnings hold up, maybe most good public sector banks, of which Union Bank can be called a part, should do well. So I wouldn't worry about throwing out the name Union Bank immediately, though I suspect that SBI and Canara Bank are probably better bets from the public sector banking universe.
Okay, and no wonder with all the volatility, we've got some questions coming in on Paytm. Deepak Shaw has this query. Go ahead, Deepak.
Hi, Udayan. I had purchased Paytm stocks worth 1.5 lakhs at the listed price. So that is during the launch of the IPO. And as we know the story now, valuation is down by more than 60%. So at this stage, when the valuation has depreciated by more than 60%, my dilemma is should I continue holding the stock or should I sell it off? Because either ways, the situation looks difficult for me.
Yeah, you have my commiserations, Deepak, because the situation is indeed quite difficult. There's no easy answer to this. The point is that Paytm, even after falling 60% down to 800 odd rupees, is still not showing a bottoming out process. It needs to find a level and settle down there. Every time it attempts a rally, there is more selling and the stock goes further down. So what you would like to see as a Paytm investor is some sign that the stock is trying to find a floor and to work with it. Now, whether the floor is 700 to 900 or 600 to 800, we don't know. But I would say this, that most of the price erosion in Paytm might have happened already. But it will need time now for it to form a base. That base formation has not happened already. And after that, you probably will see some kind of accumulation and pullbacks from longer term investors. There are two problems with Paytm at this point in time, Deepak, and both are difficult problems. One is that the near-term problem is that with the current results, what came through is that the company has actually taken fairly significant hits on its P&L because of ESOP grants, and most of the ESOPs have gone to its CEO promoter. And the way it is structured, it looks like the next couple of years, they will contribute to losses, hundreds of crores of losses, these ESOP grants as they continue, and that becomes another obstacle for Paytm to move towards profitability. The bigger problem, fundamental problem, is that while the payments business is doing well, Paytm's move to the financial services business is still not showing enough kind of traction. So they are doing lending, but that's all those BNPL small ticket loans. They're not making significant headway in large ticket consumer loans or merchant loans, which is what the market wants to see. So till you see demonstration of progress on the financial services front and some of these ESOP issues, ESOP loss issues blow away, I think Paytm will not give you significant outperformance. I think it will continue to grind in a range. You're probably better off looking at greener pastures because the market is correcting. You might find better value elsewhere.
Okay, Hemant Urdwaresh from Pune has a query on HAL. Let's listen into this one.
Hi, my name is Hemant Urdwaresh and I am from Pune. My question is, I am holding 500 shares of Hindustan Aeronautics Limited bought at rupees 1348. What do you recommend? I can hold it for long.
I think there's a lot of interest in defense stocks at this point, sir, because I think what came through in the budget as well, if you notice that there is a great amount of emphasis on indigenization of equipment from the defense sector. I think for incremental equipment, capital equipment purchases, the level of indigenized component is about 68%. And that opens up opportunities for many of these listed defense players. And the top three, I would say, are Bharat Electronics, Bharat Dynamics, and HAL. I think these are the three premier defense companies. The order book for HAL is quite good. Recently, they have been bagging some significant orders from the likes of DRDO, the government of Mauritius, and even Bharat Electronics. And valuations are very cheap. I mean, there's not too many stocks in the market that you will find at P multiples of 12 and 13 like HAL is trading at. So good valuations, good space. The issue is that don't expect great growth from HAL. Despite the order book that I spoke about, HAL will probably still continue to grow its earnings by around 10 to 12% over the next 2 to 3 years. That's not phenomenal growth, but it's steady growth. So if you like a sunrise kind of sector with steady growth, I think HAL is a company that you can hold on for the medium term. I don't think earnings growth itself will deliver great stock appreciation, but maybe the stock will see some kind of re-rating given the mood and sentiment on defense stocks. Maybe the 12p, which I spoke about, goes up to 15p. That plus the 10-12% earnings growth can lead to a decent 15-17% kind of stock appreciation over a 2-3 year period. So if you're one of those steady type kind of investors, not expecting a rocket, then I think HAL could be one for the medium term for you.
Okay, that's all the time we have on the show today. Udayan, thanks for taking all those queries. And for those of you who do have questions around your stocks and investments, simply write into us at the number on your screen and we'll try and answer as many as we can week on week.